Gunjan, you're aging before our eyes, I think. Happy birthday, Gunjan. That was in the notes.
So
That it was. You're not 8. I was kidding.
Scared me for a second.
Yeah, I know. Yeah, you're not really 8. I was kidding. I mean, I could tell you're a year wiser. How about that? A year wiser. So, given that wisdom, you're welcome. Given that wisdom, are we back in some type of? I guess it's a trading range. We don't have to say we're in a new bear, or it was the end of that brief bull we had in the Dow Jones. It's a trading range, and we're just seeing more of that, I guess.
Look, Joe, I'm getting deja vu to so many other points in the year where it's been one step forward, 3, 4, 5 steps back for the stock market, where every time people get excited, they pile into stocks, high yield bonds, meme stocks, some of the most speculative trades out there. We get comments from Powell or fears about rising rates, and those hopes are quickly quashed. And that's what we're seeing this week, where the S&P is down around 3.2%. It's erased its post-Powell gains from last week. And, as you said, we seem to be right back where we started.
Elyse, yesterday, and I actually saw articles written that Jamie did not say there was a hurricane coming. I tried to get him to say, will there be a recession, won't there be a recession? Will you weigh in? Will there be some type of recession in 2023? Well, I guess, can we call it real back-to-back quarters of declining growth? Will we see that?
We think so. That is our base case, that the United States is going to enter a recession probably in the 3rd or 4th quarter of next year, and that's going to be accompanied by 2-3 quarters of negative GDP growth. If there is any sort of silver lining to recession, which of course is never going to be good news for economic participants, is that we do think that that's going to be the final thing to help bring inflation down, particularly that component that's being driven by wage growth.
Yeah, that was one of the other things that Jamie said, was that inflation is so insidious that, and a lot of the CEOs all kind of said the same thing, that they're willing to let the Fed do what it needs to do, even if it does cause a recession, because inflation is more concerning long term than maybe a brief recession.
We would agree with that. And we think about inflation kind of in 3 different components. You've got the goods inflation piece, which has been coming down and, is rolling over convincingly. You've got the shelter component, which, per the higher frequency data that we're starting to see, we would expect to fall over the course of the next 3 to 6 months. And then there is that labor market component that Chair Powell called out when he spoke last week. And for that piece to really come down convincingly, you're probably going to have to see a rise in the unemployment rate. The Fed has conveyed that they're willing to tolerate a rise in the unemployment rate. And so we're preparing for that to be the case.
Gunjan, in terms of these data points that, we really are sort of going from one to the next. The most recent one that was concerning was the jobs report on Friday. Before that, we had a couple of inflation reports that were cooler than expected. And the market just seems to, depending on whatever the news of the day is, it moves one way or the other. What should we be watching between now and the holidays, you think?
Definitely CPI next week, any Fed speak out there. But I think what you described is part of why Wall Street is just so bearish right now. In futures positioning, people are far from bullish, and among the most bearish levels we've seen over the past decade. Mutual funds have increased cash balances to around 2.5% of their portfolios, up from 1.5% at the start of the year, and hedge funds have been decreasing how much leverage they're taking. So all these different economic data points where, one is a sliver of good news, then those hopes are quashed once again. I think that's what's really put people on edge and made them reluctant to kind of bet on this Santa Claus rally through the end of the year. At least among investors I'm talking to, people are afraid of, getting contrarian and getting bullish out there right now because of that.